The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
There seems to be a REIT on the growth and income radar. Todd Bunton, our growth and income strategist, is going to tell us more about it. So you are back on this REIT bandwagon.
Yeah.
These are some of your favorite things, aren't they?
Yeah, I guess so. Right now, I guess REITs in general, they're doing well because they are pretty interest rate sensitive. If you think what a REIT is, real estate investment trust, they own real estate, so they have a lot of leverage, a lot of interest expense. So when long-term interest rates are declining, these stocks tend to do well. And not only that, their dividend yields look attractive compared to fixed income securities. So LaSalle Hotel Properties is the one I'm talking about today. LHO is the ticker symbol.
Yep.
They are a hotel operator, or not an operator, but they own the properties, and they actually
46 of them.
46 properties in 10 states, and they're also in the District of Columbia, but primarily in bigger markets. They're in New York, they're in Boston, they're in California, a couple hotels in Chicago. So they focus more on full service upscale hotels. And the hotel industry in general has been very hot the last 12 months.
Yeah, from what perspective? Because hot is kind of a relative term.
Yeah, so in terms of occupancy rates and room rates, the growth they're seeing is the strongest in 15 years.
Wow.
Yeah, so that's very good for them. And there's a metric called RevPAR, revenue per available room.
Right.
That's been up in the upper high single digits over the last several months, really. And that's no different at LHO. The company's delivered 8 consecutive positive earnings surprises, and they've seen a big increase in consensus estimates over the last several months too. As you can see, I brought with me the price consensus and EPS surprise chart, and I just circled 2014 and 15 consensus estimates. You can see are just steadily marching higher, and you can see a nice string of beats there. And if you think about a hotel, they're pretty high fixed expenses as well. So with that increased revenue, a lot of that's falling to the bottom line. They're seeing increased profit margins through operating leverage. So a lot going right for hotels right now, a lot going right for REITs. This is a Zacks rank 2 of buy based on its earnings momentum. And then, like I talked about, their dividend. They pay a dividend that yields 3.5%.
That's what we like to hear.
Yeah, and that's pretty much in line with other hotel REITs. I brought a chart here and compared its yield and its rank and its little bit of valuation compared to its peers. It's in line. So a lot of these names on here, CLDT, that's Chatham Lodging Trust. That's a stock I own in the Income Plus Investor. That's a very solid little hotel too. And Chesapeake Lodging Trust, or Chesapeake's on here as well. So a lot going right in the industry. LaSalle Hotel is just one of many that's going right here, but it's one that could see solid total return potential in 2015 if people are looking for both growth and income at a fairly reasonable price.
All right. Do you own LaSalle?
I do not.
All right. Check out other stocks, stock picking strategies, and stock commentary on our website, Zacks.com. So if you're not there already watching this video, get on over. You can link to all this information right off the homepage. With Todd, I'm Terry Ruffalo.